Share. Buying a share makes you a shareholder, which means you own a small fraction of the company and are entitled to a portion of its profits and assets. Stock. A stock is a collection of shares of a company or a group of companies. Bid and ask. The bid is what buyers offer to pay for a stock, and the ask is what sellers will take. Broker. A broker is a person or a company that acts as an intermediary between buyers and sellers of stocks. Market order and limit order. A market order buys or sells at the current price, while a limit order sets a price you're willing to pay or get. If you buy 100 bank shares with a market order, you'll pay the current price. If you set a limit order at INR 1500, you'll buy only if the price goes down to INR 1500 or less. Volume. Volume shows how many shares were traded in a period. Volatility. Volatility shows how much a stock's price changes over time. Bull and bear market. A bull market is a period when the stock market is on the rise and investors feel positive about the future. On the other hand, a bear market is when stock prices are dropping and there's worry they may go down even further. Dividend. A dividend is a payment that a company makes to its shareholders from its profits. Earnings. Earnings show how well a company is doing money-wise. They're often shared as earnings per share, EPS, which is the total profit divided by the number of available shares. PE ratio. The PE ratio tells you how much people are paying for a company's earnings. Index. An index groups together stocks representing a section of the stock market or economy and shows how these stocks perform. ETF. An ETF is an exchange-traded fund, which is a type of investment that holds a basket of stocks, bonds, commodities, or other assets. Short selling. Short selling is when you borrow shares from a broker and sell them, hoping to buy them back cheaper later on. It's a tactic to make money if a stock's price is dropping. But it's risky. If the stock's price goes up, you could lose more than you initially made. Say you short sell 100 shares at INR 100 each, getting INR 10,000. If their price falls to INR 90, you can repurchase them for INR 9,000, making INR 1,000 profit. However, if the price climbs to INR 110, buying them back will cost you INR 11,000, and you'll lose INR 1,000. Stop loss. A stop loss automatically sells your stock if it drops to a price you've set. Say you buy a stock at INR 100 and put a stop loss at INR 95. If the price dips to INR 95 or less, the stock sells without you having to do anything. This limits your loss to no more than INR 5 per share.